everyone, K-Kim here with the Traders Club, twotradersclub.com. Today is June 30, 2017, Friday. Welcome to the market update. Market, as I publish this video, market should be open another 30 minutes, so you should be seeing some flashing lights on your left. We're gonna be looking at quite a bit today. Dow Jones, Spider, Russell, Qs, the financials. We'll look at Citigroup. There's something that I want to talk to you guys about, some Citigroup action. Apple, Amazon, Facebook, Tesla, Google, Netflix, gold, silver, GDX, IBB, TLT, the dollar, and USO. And I will spend some more time on these names right here, including Spider and so. And as I start to get these, I'm going to go through them very, very quickly, just to let you guys know. Hope you guys had a good week trading. A lot of shenanigans, a lot of shakedown, head fakes. This is the market. And if you can't stomach this kind of a price action, then this might perhaps not be your vocation. Once you start trading and investing in this market, you signed up for this. Volatility is part of the process, is a part of the game. And actually, it's kind of a fun fact here. There are more days that you're going to have a volatility than a smooth up days. Actually, there will be a 2 to 3 days more volatility, sideways, up and down days than a smooth up days. And you can just go back and historically, usually you would have kind of an up move and then you get some volatility. But that volatility usually lasts longer. You know what I mean? Like you would have, like this is 2 weeks? I mean, for that 2 weeks to happen, that smooth 2 weeks to happen, we grinded for a month, 2 months. This is a 2 months. And then we had 2 weeks of smooth bullish days. And then we saw another, almost 2 months. And then with a 2 days, kind of a gap up move. I can't even really call it a smooth days. And then you saw another volatility of 2 months. And then you kind of you could look at this as a smooth day, maybe a 2-3 weeks. And then probably there's going to be, month or two of volatility. In this market, there are more volatile, consolidational, sideways, up and down days versus smooth, bullish days. So if you're only looking for or looking to catch the smooth, bullish days, and you're only happy when you catch or when you're in the smooth, bullish days, this market will make you very miserable when there will be 2 times more days. There will be days like this where we're going to have this gap ups, gap down, shenanigans, up and down. This is a reason why I always tell you guys on every single video, I don't really care what's going to happen tomorrow or what's going to happen next hour. What I really want to know is what's going to happen next month, maybe 2 to 3 months. Because if you pay attention to intermediate and primary term uptrend, and recently I wrote an article called Spider the Next Big Move, and in that article I kind of show you which moving averages to watch on the weekly chart, on the daily chart, and how you can look at this in a perspective way where you don't get emotionally rattled just because there's always because these kind of shenanigans is gonna happen. I mean, are you expecting the market is gonna be bullish every single day? Are you expecting market is gonna do what you expect it to do? Then it's not a market anymore. So this is not a time to panic or freak out. And every pullback, I almost feel like I always talk about that. So anyway, we're gonna start with the Dow Jones here. Dow Jones, we're back above 20 MA. So 20 MA has been rising, has been acting as support. We get slightly below it. When we lose 20 MA, what happens? There's a 50 MA. So these two are buddies. 20 MA, 50 MA, they work together. If we lose 20 MA, 50 MA is there to help the bulls here. Get back up, comes down, retest at 20, get back up, comes down, gets back up a little bit, gets the flush yesterday, gets slightly below the 20 MA. We get the dip buying opportunity yesterday, and then 20 MA, we're back above the 20 MA. So Dow Jones Industrial Average, ETF Diamond, looks like the minor term sentiment is starting to be more bullish here. But I do expect the volatility to continue next couple more weeks until we see some signal that we might have, we see some signal that the trend could continue or resume back up here. So we're still in this kind of consolidation, resting pattern after this kind of bullish move, which supports bullish idea. That's what you want to see, buyers. When, if you are trading this market, investing this market, obviously day traders, it really doesn't apply to you. Any short-term trade doesn't really apply to you. But if you're position trading, if you're more longer-term traders, or if you're even an investors, you will see the market move, and then market will digest that gain. You know what I mean? We're not in tech, we're not in dot-com bubble type of scenario where everything goes straight up. It won't happen. This is normal. This is what happens in the market. I just don't understand when everybody just start freaking out every time there's a pullback. I just don't get it. That is just without the pullback, there's no uptrend. Looking at 20 MA here, obviously 20 MA been acting as support quite some time. We lost it yesterday. We got right back up, and then we got up a little bit. We flushed it. We lost it again. Now we're slightly below 20 MA. I mean, this is a headache. You want to figure out what's going to happen. Really, you want to figure out what was going to happen last 1 month, the whole month of June. I mean, really, nobody. It's a shenanigan. Why trying to figure out what's going to happen next day, right? Just let the market sort things out. And something that I've been talking about, if you can go back to my market update video, that I was open-minded for a pullback. I was open-minded for a pullback to retest that 50 MA, that coinciding with the 50% retracement on my Fibonacci retracement zone. We got up here, we consolidated. Yesterday, we did lose some ground, and this thing came down quickly. We saw dip buyers coming in right on that 50 MA, which is my pink dotted moving area. That is a setting on low. So if you want to put this on your chart, this 50 EMA, which is exponential moving average, is setting on low to accommodate these moves right there. So you found support there, found support there, found support there, and found support yet again. And you say, well, maybe this time is different. Okay, maybe this time will be different. I don't know. Nobody does. As long as it works, we just continue to give benefit of the doubt. Or something what I like to say, that it has an impressive resume, meaning it's been acting as strong support. So I'm going to, give continued benefit of doubt that we're going to see some buyers there until we see otherwise, the price action telling us something else. I would have to say intermediate term, because we're above the rising 50 EMA. Intermediate term, benefit of the doubt goes to buyers. Intermediate term, we're still in a bullish uptrend, higher lows and higher highs. In the minor term, yeah, it's volatile. In the minor term, I would have to say that it's neutral, as the 20 EMA is kind of flattening out. But obviously in the micro term, we're below 20 EMA. 20 EMA did acting as kind of support right here all throughout June. So we're kind of below it, so that could set us maybe a little bit more deterioration, or maybe we gap up Monday and continue higher. I don't know. My objective, my goal, and your goal, if you're not a day trader, is not to figure out what's going to happen Monday. Is to figure out where could this trend continue, where could this trend go next couple months from here on. What are the levels to watch for this trend to hold, for that possibility to increase, that the primary term uptrend will resume back up to the upside. My target still on spiders 240 at 250, and and which I read an article, I think on this day somewhere in like late May or so. I don't somewhere here, I forgot where. Spider the next big move, and my target 240 at 250. I still think we're gonna get there. I don't see this thing coming much lower as of today. It looks like we're holding up well. 50 may held up. 50% retracement there. So these two levels going to be important level. We want to see these two levels hold. The worst case scenario, 239. So these levels, if any kind of volatility continue next week or continue deterioration next week, you want to see buyers hold 241, 240, 239 for intermediate term intermediate term trend to stay bullish. Obviously, in the minor term, I'll say kind of a neutral at this point, as the 20 MA is kind of flattening out a little bit here. Let's look at Russell 2000 on the small caps. Small caps holding up well here. Actually, I'm going to move this up right there. And then let me move this right here. So those two levels are important. This has been a prior resistance, a minor term. And so we kind of went all around it, and then we're holding up today. Yesterday, you can see this thing came down quickly, though, the 20 MA. This is the reason why I highlight these levels on my journal post. The 20 MA is still rising. The difference right now with the 20 MA is that 20 MA has been flattening here back in early May. You can see that right there, 20 MA. There's a lot of shenanigans happen here. Instead of price moving higher, it fell, kind of took everybody by surprise. It just pretty much wiped out all the short-term trade. They got scared. They were panicking. They stopped out, closed their positions, and then what does the market do? Bang, right? So maybe this is kind of what really happened. How the market happened. So a lot of people are going long at this point, let's just say, and then they got stopped out. And the market started to move back up. What do? They start adding it back. Oh, I was right. I should have held it. And then they come back down, bang, and they finally close it out on this day. And then you see that move. You see, the market is a master deceiver. It's been around longer than you and I, so it knows how to deceive you. It knows what most people are thinking, right? So here, though, a little bit different sentiment. Where the 20 MA, we saw some volatility like here. Instead, we actually moved higher several days ago. And the 20 MA is now kind of in this rising strength that we're seeing. Not like in May. You see that. So we got a little bit more bullish sentiment here than here. As we look at the 20, we're still range bound. We're in this 6-month rising channel, and we're just right at that level. So I mean, what the best way for buyers to really break out of this will be kind of fizzle here a little bit and just gap it up. Just how he did it with maybe Citigroup. Just gap up above this resistance. Then maybe that could be the catalyst for Russell to get to maybe 150s. But so far so good. I like the monthly chart. I still like the weekly chart. So let's see how he plays out there. NASDAQ Qs. Qs are losing some ground here. This is a level that we talked about in the last market update or 2 market updates ago. This is kind of a rising channel resistance type of deal there. And then we had this kind of a, leaning to the upside head and shoulder formation. And we have just broken the neckline yesterday. The problem with the minor term sentiment is that these gaps, these are open. I talked about in the last update, I think, when these gaps doesn't get filled, when they remains open, it gets hectic. You see that right there, this gap remained open yesterday or several days ago. This green candle, it should have gotten up, maybe fill it or continue higher. Maybe then that would have been a little bit better, but it failed to fill that gap down once again. So these 2 gaps are open. As long as those 2 gaps are open to the downside, minor term sentiment is bearish. Not only that, the 20 MA is declining. So it tells us that minor term sentiment is bearish at this time. However, the 50 MA this is where we're kind of finding support. So let's say if we do bounce, but if we lose or fail to fill the gap, and we look at this pivot, this rising channel pivot as a new resistance, old support becoming new resistance, and then tanks, then there might be head and shoulder formation. Then we might come back down to these levels at 143, 134, 132 on the Qs. This is where 100 SMA is residing. We see also the gap fill area in that level. So again, that same logic applies here. So let's say this thing comes down, it fails to fill this bullish gap. That will be a bullish sentiment in the intermediate term. If that fails, fill it. Plus, that's the level where we have that 100 SMA residing, which is also coinciding with this kind of a rising channel support. You see that how that level is important. When technicals kind of collide like that, you pay attention. So when this thing starts coming down, you got the 100 SMA there, we got the gap area there, we got this rising support there. They're all residing in that vicinity. So that's the likely level where a lot of people are gonna be watching that vicinity. Not because everybody's looking at these technicals. You understand that? Not just because I drew a couple lines, it's some voodoo shenanigan where it's just gonna work out like magic. No. A lot of people are conditioned where, hey, you know what? After a certain decline, I bought the dip and then I made money. Or I shorted at the bottom and I got burned. So people remember those certain levels. You see that this was a 100 SMA that last time it retested. So we haven't seen this in retesting 100 SMA. Again, doesn't mean that everybody who trades Qs looking at 100 SMA. No, it's just that most people, do you understand? Most retail traders, they don't trade just because, well, they have a profound strategy and that they're gurus and technical, technical analysis. No, most people trade kind of in this intuition, like that kind of feeling. It's like, well, last time I bought it here, I made some great money, and or some people say I showed it there and I got burned. So this is an important pivotal level because people tend to remember the major happiness or major, difficult or angry or hurtful times. They don't remember the smooth, normal day. They tend to remember kind of the pivotal moments of their life. Same thing happens in trading. That's what technical analysis works. That's what we do with technical levels. We're trying to pinpoint those pivotal levels, right? And also, 100 and 200 SMA, I think a lot of fund managers do watch those long-term moving averages. These 100 and 200 SMA are very, very popular by these kind of major fund managers. So those are the levels people are gonna watch here, and technicals are telling us that. So that's the level to watch here. Let's go to the banks. Banks, this is a good level here, good sign there. We gapped up, we faded it. That's okay because you know what? We're cultivating. That is what's important. Higher lows, higher highs. We're on an uptrend. We talked about that inverted head and shoulder. I've been talking about this for some time now. I talked about this head and shoulder formation. I call it a bluff. A lot of times these kind of things happen to scare people out, scare investors out, and then it forms kind of an inverted head and shoulder. And then we initially confirm by hitting or getting above the neckline, come and retest the neckline, which I talked about in the last market update where this is going to become a strong support, and then we got back up here, and now we're near the new highs. This is a great. We have all. This whole head and shoulder formation has already negated or nullified when this thing broke above neckline right there. That's what I call initial confirmation. When it breaks up, when it comes back down, retest, and then get up, that's what we'll call full confirmation of this inverted head and shoulder. So it looks good here, looks bullish. You got 20 MA rising, 50 MA rising, with all these moving averages rising here. Trend looks like it's going to continue. Monthly chart looks great. Weekly chart looks good. No worries there. Citigroup, what I want to talk to you guys about Citigroup, I'm going to actually change this. I'm holding full positions on Citigroup. And I didn't close any of my positions just because yesterday's a shakedown. I didn't get stopped out of any of the positions because of yesterday's shakedown. I held through all of my long positions, options, and shares. Excuse me. And obviously, I'm not going to react in an emotional way just because we saw one-day decline. What the hell? Oh, there you go. One-day decline. I mean, anybody who get too emotional just because one-day decline, I really feel like they really don't understand how the market moves. Market is going to see, every time I get stopped out or I close my position, if there's a one-day decline, then, you know what I mean? I'll be out of the business. It's just I cannot do what I do. Because that's how the market moves. Market is not going to always have smooth days, just like your life. Doesn't your life always have smooth days? No, you're going to have a bad day and good days. Hopefully you have more good days, but you have good days and bad days. Market does the same thing. But anyway, Citigroup here, this is what I'm going to talk about. You see that gap up? You see this gap up right here? And this is kind of what I was talking about earlier on Russell 2000. Russell 2000 was in 6-month range bound. You see how it poked above it and then gapped it up. And then we kind of, we consolidated both. That's a textbook bull flag, and then boom, right? And we saw a huge gap. But one that news that, Citigroup's doubling the dividend after the Feds approved the dividend plan. This gap, 66.92 and 65.15, this gap is very, very important. This is why I made it into purple, because this gap, it could be a pivotal gap for Citigroup, the life of Citigroup. The gap was open. You see, isn't that interesting how technicals just collide like this, even with the fundamentals, back when this thing gapped down was 2009 January 12th. This was a 2009 January 12th when we had a financial crisis, right? When the banks were crashing, this was that level. That was a pivotal, the 66.92, 65.15. It was that pivotal level. It's interesting though, when we go back today, that's the level we gapped up with that news, that Fed approving the dividend plan news. It was perfectly, this gap happened because of the news. And it's almost like technicals knew this is important level, like they're gonna do this now. Isn't that crazy how it works like that? But here's why this purple is very, very important. This purple line that I drew and drawn here is I've never seen something like that happening in my trading career. Like this could now looked at as like just one big island. I don't even know how that works. We don't even have any data to like back test it. So now we can really gauge it with this. Not only that, this could be, because this was a pivotal level for Citigroup back in, this thing actually tanked from 560. So that was already crazy. But that was that, you can look at that maybe even as I kind of got that one gap down level. So now this could be the pivotal gap, because we had a gap down, we got a gap up perfectly lined up like that. Could be the pivotal gap for the life of Citigroup going forward. If this gap doesn't get filled, I hope it doesn't. If this gap remains open, this is one of the main reasons why I'm holding full positions. My target was 67 since I started accumulating here, right? So if this gap doesn't get filled, we may never see this gap getting filled ever again until we see another financial crisis. We may never see Citigroup ever filling this gap ever again unless we see another financial crisis. If we can keep this gap open, maybe next several months and continue to move higher. And my next targets are 70 and 74. May start to, and I think we do have earnings coming up soon here, July 14th. So I may close my positions at like, maybe I reduced it to half or 1/3 before the earnings. But looking great. It's holding up well. You see the lower wick here, holding up quite well here. Let's see how that plays out. Let's look at Apple. Apple, we are in a dire situation because we're holding the neckline here. These gaps continue to remain. You see how gaps continue to be a theme of this market update. The gap failed to fill this gap. Things got hacked. They came down another gap. So again, these gaps are unfilled here. We got this neckline, potentially head and shoulder formation. So let's say, if we break below it, you want to see this thing kind of go and retest, maybe retest 100 SMA. And if you get rejected, only if you get rejected, I see 134, 132. What could possibly happen is, you get below it, traps the shorts, take out the stops from the longs, and then it goes up, and then we throw inverted head and shoulders, and then reverses. That's another scenario. So that this is kind of the level that you're going to see a lot of head fake shenanigans. So keep that in mind. If we lose it, if we see a retest of the neckline and get rejected, then we'll probably gonna come back down to 134.28 or so. That's the level I'm actually thinking about. If we do come back down, that's the level where I'm gonna be thinking about re-entering my calls for a bullish move there. All right, so I'm gonna go through these quickly. I'm not gonna spend as much time on Amazon weekly. Here, I'll show you real quick here. Amazon weekly stochastic is level to watch. I mean, not only weekly, a lot of these is starting to be somewhat, you can see that there. You can see that there. You can see it there, right? So we're kind of getting into the extended levels, or in the past where Amazon did see a correction after that, but I'm not, we will need more evidence in the price, but we have supports here. We got 956 is kind of the current support. We're residing with the 50 MA. 50 MA did act as support on this flash crash. We have this gap fill support at 929. got 100 SMA, 200 SMA. Those are the levels to watch. For me to kind of want to go long on Amazon, obviously because I'm much longer term trader than most of you guys are. 844. I'm not saying it's gonna get there, but let's say if I get there, because I'm not gonna short this. Let's say I'm like minding my own business, trading my other things, and then I saw Amazon. All of a sudden, it comes to 80.44. This is a level I'll be thinking about buying. If not, then I just let it go. Let's look at Facebook. Facebook still holding up, maybe a little bit of triple top. Never confirmed. Keep in mind we're holding up above these levels. So what you need to watch out is a lot of times they hold up like this and fakes everybody out and just plunges. If it does, probably that would give you a buying opportunity somewhere in that vicinity. Watch out for that. Let's go Tesla. Tesla, still looking good. I think, still in an uptrend. We are extended, but doesn't mean it cannot go higher. We're seeing a little bit of pullback. We saw pullback here. We saw pullback there. We're still pulling back. So any kind of short-term swing traders, any of those pullbacks, probably an opportunity. So we got uptrend here, we got uptrend there, so those level to watch. 50 MA hanging out, 327, so those are the next support levels to watch. Google actually is losing the recent support. We got this kind of a minor term head and shoulder formation, confirmed. There's a chance it could kind of get up here, retest it, and then continue lower. So those are the levels to watch here. We got some of the levels to watch. We got this rising resistance. We broke out of it, potentially come back and retest it. We'll see how that plays out. Netflix also losing a little bit of ground. This is a rising kind of a parallel channel type of move here. We're holding the 100 SMA. 100 SMA did act as support here. We're acting as support there. So if we lose that level, we got the gap area. A lot of times the gap area will act as support when we fill it. Let's say we continue low, we fill the gap. What it's gonna want to do though is gonna want to kind of retest that 50 MA. And then if 50 MA gets rejected, that's the same level coincident with this rising channel support, potentially act as new resistance. We get rejected here. This thing could come back down to retest a 200 SMA and then kind of retest the support level. I think some of those levels, 129, 130, this level is actually, if we do come, Netflix comes down some of those levels, I'll be looking to enter with some long-term calls there. Let's go to GLD. GLD, still no man's land. I've been talking about this, but it's still not interesting for me. We're still this prime time downtrend resistance. I need this thing to get above 124 for me to get interested going long here. We got something going up, possibly a basing period, but still we need more. Still downtrend, it needs to get above 1783 for me to kind of get excited to go long for primary time uptrend to commence. Again, this is GDX, same thing. Primary time. This is we're now 200 cents. Downing, we're just curling down. We're just kind of consolidating. No man's land, not a good look there. Very exhausting look for the buyers. IBB, we talked about IBB I think last week, a few weeks ago, that you want to see this thing. Instead of chasing this, what we talked about last time, I think last time or 2 weekends ago, they just going back up here, wait for a pullback, and then wait for entry. Don't ever chase these things because the people trying to chase it, they get burned. I hate breakout plays. I hate chasing. I never, ever chase trades. When I first started trading, I did that a lot, but you tell yourself, stop doing that and don't do it because it will burn you. I think some of these levels could be a good level to. I personally won't be doing. I have other positions that I think look better than IBB. I don't really trade Biotech that much. It's not really my forte, and I'm not. You know what I mean? So just because sometimes if you don't understand certain sector, just don't trade it. I like trading like financial sectors and things like that, but I just don't like. I don't know the last time I traded any Biotech. It's been a while, so I probably won't be trading it, but I'm just giving you guys my thought on these technical levels. But some of these level 300, I think some of these levels could be a good level for bounce for next target to about maybe 340 there. Treasury bond, I like Treasury bond here. Since we bottomed here, we've been cultivating higher highs, and that's a good look here. That's how the market. See, we never seen higher highs here. That's a downtrend, and now we're finally seeing higher high, higher low, higher high, higher low, higher high, and that's how the trend is gonna get established. So looking good there, Treasury bond. Now there's we got 200 SMA, 50 MA in that vicinity. So those are the levels to watch. But trend is starting to develop there. Let's look at dollar. Dollar, monthly, we have a monthly divergence on dollar UUP. That's something we talked about, I think, last week here. Oh, what happened? Okay. So there's that. What we talked about last week was this bearish divergence. Not a good look. Pretty strong looking bearish divergence there. We got bearish divergence on all of my indicators and oscillators here. Lower low, lower high, lower strong divergence. Look at that MACD after he kind of cultivated higher high on the price action. So that just really made this thing do that. So it looks like, however, on the weekly though, we are oversold. On the weekly power shares dollar index, you see that right there. We are getting to that level once again, so we may see some kind of an oversold bounce that could lead to further move, but at this point we're dealing with oversold sentiment with monthly divergence. So that's how it's working here. USO, it's been moving higher, however we're still on a downtrend. Again, these are things that likely happens here. That's why you don't go short just because it broke the support. You know, it just does. That's not a good strategy. But you see that broke below that, and then we're rallying back up. Problem about it is we're still in a downtrend. We got lower highs here, so you get these rallies, and a lot of times it gets failed and continue lower. So we have to look at this as benefit of doubt goes to buyers, sellers in the intermediate term and primary term. But in the minor term, we saw a little bit of momentum to the upside. So let's see how that plays out to the upside there. But looks like I got some support here and here. So that's everything for me for this week. Again, this is my website here, twotradersclub.com. Best way to connect with me and with my articles and with my videos like this is to go here and then come down to article alert, put your email address. Then every time I post something like that, it will go straight to your email, so you'll never miss any of my work. So have a wonderful weekend. Good luck trading next week.